Looks like someone forgot to tell Walmart the economy is improving. Investor Beat starts now. Thanks for watching. I'm Allison Southwick. The market is down today. The blame landed on a couple lackluster earnings reports and fears that the Fed will scale back on stimulus. Joining me now in the studio is Matt Koppenheffer and David Meyer. Gentlemen, our top story is Walmart. They missed analyst expectations and announced lowered revenue and profit forecasts for the year. Leadership blamed the end of the payroll tax cut, saying that shoppers are struggling financially and just not spending like they used to. So, Matt, should I believe it when Walmart shrugs their shoulders and says it's the economy?
It's not an explanation that I'm crazy about. What I will point out, and I can thank our colleague and my friend Morgan Housel for tweeting this out the other day. We have to remember, even though we commonly say it, Walmart didn't miss analyst expectations, if I can get that out. Analysts got Walmart's earnings wrong. That's the way that works. This is becoming a trend now for Walmart. The excitement isn't there, the growth isn't there. How much investors should take away from this in terms of should they continue to own Walmart, I don't know. If you want an exciting growth company, this isn't the one for you, but they reported $4 billion in profits during the quarter. So in a lot of ways, this is still a profit machine.
So, David, when Walmart misses, everyone starts saying it's Amazon's fault. In this case, Walmart was saying the economy, but everyone else says Amazon. What do you think?
So I actually do think it's the economy. I think if you look at where jobs are being created today, if you look around the country, there are still plenty of people who are feeling the pinch of the recession that, even though it happened in the past, they're still feeling it. And Walmart has a lot of data about the shoppers and their activities that come into their stores. So I think we can look to this as a barometer for the economy.
All right, so then Matt, some people might look at this as a buying opportunity. What do you think?
I don't think it's fallen quite enough today to make it any sort of screaming opportunity. But I will say this, we're going to talk about Berkshire Hathaway a little bit later in this show. Earlier this year, Berkshire Hathaway was adding to its holdings of Walmart. Just saying.
All right. Well, it's time to look at today's movers and shakers. Cisco dropped after a fourth quarter earnings miss. The company also announced plans to lay off 5% of its workforce. The CEO says they're going to look for growth opportunities. Matt, Cisco is a huge company. Where is there room to grow?
We're looking kind of at the first quarter here. I mean, that's the reason for the focus. But big picture, I think that's what Chambers is looking for in terms of growth. Big picture, it has gotten so much tougher for Cisco. And I think a big part of the reason is that early on, way back years ago, Cisco was what people had to buy because companies weren't as ready to implement different networking systems. And so Cisco is the gold standard, easy to set up, reliable. Now there's a lot more competition, and that's trouble for Cisco. And in general, that's why it's very difficult to invest in technology companies.
All right. Kohl's is up after announcing quarterly earnings. Same-store sales were up, but they still cut their guidance for the year. David, in light of what we just learned from Walmart here, is Kohl's lucky or are they smart?
Oh man, it certainly looks like they're lucky. If you look at not just Walmart, but there are plenty of retailers who are not reporting good results. But Kohl's come in 2% increase on sales, 4% increase on the bottom line, just under 1% comps, and their stock is up. I would say that's a nice bit of luck for today.
All right, finally, Berkshire Hathaway is moving money around. We learned today it sold shares of Kraft and Mondelez while picking up Dish and more GM. Matt, did anything surprise you here?
Did anything surprise me? Well, the pickups of Suncor and Dish Networks, that's a little bit surprising because it's not really, those aren't really in Buffett's strike zone, but I think these are coming from, most likely these are coming from Buffett's lieutenants, Todd Combs and Ted Wexler. What's kind of interesting about the 13F filing, that's where all of this comes from, is it said some confidential information was kept off of the report, although it was filed with the SEC. The last time we saw this was in August of 2011. November of 2011, we found out that Berkshire had built a giant stake in IBM.
Finally, Red Robin saw a big jump today after reporting a 44% increase in second quarter profit. So, David, people really like those burgers and boozy milkshakes, right?
It certainly looks like it. Even though traffic was down slightly, the average check was up 5%. So I'm guessing there's a few more burgers and maybe even a few more boozy milkshakes on their tabs. The other thing is management is making some good operational changes, and they're seeing those flow through higher margins to the bottom line.
All right, so that covers all of the movers and shakers for today. Let's look ahead. I want to hear one stock on your radar. Matt, do you want to start?
Yeah, I'm going to cheat though. I'm going to say two stocks that are on my radar. Off the top, I'm going to be looking at Guess, but they're reporting earnings on Monday. Urban Outfitters is going to be reporting earnings the same day. And with apologies to the shareholders in both of these companies, the primary reason that I'm going to be looking at them is that we're starting to get into the part of earnings season where we're seeing consumer discretionary companies reporting earnings. And this is a great read on consumer spending. So you strip out the international growth, which has been stronger than North American growth for these companies, and I'm going to be looking to see if there's some rebound, some strength.
All right, David, what are you looking at?
I'm looking at Pandora. They will actually report earnings next week, but active listeners up, listening hours up, advertising revenue up, and the company is just getting started in disrupting terrestrial radio. The stock is up 115% over the last year, but when they report the good numbers that I'm expecting, I think it's going to go even higher.
Sounds great. For David Meyer and Matt Copenheffer, I'm Allison Southwick. Thanks for watching.
People on the show may have interests in the stocks they talk about, and the Motley Fool may have formal